In this video, I'll explain the new $3,600 or $3,000 child tax credit for 2021 and the advance payments the IRS will send to most families. If you have a child, you'll want to watch this entire video and also to learn about the potential pitfalls. Later on, I'll also explain why you should probably take the advance payment opt-out option. Hi, I'm Noel Lorenzana and I'm an accountant. Thanks to the recently passed $1.9 trillion American Rescue Plan Act of 2021, the child tax credit is bigger and better than ever. It's $3,600 for children under 6 and $3,000 for children 6 and above. Previously, it was only $2,000 per qualifying child 16 years of age and younger. Sadly, the increased credit amount is only for 1 year. That is for now. For those qualifying, the IRS will make advance payments starting in the second half of 2021. So, who qualifies for the new increased child tax credit? If you're already eligible for the existing child tax credit, the eligibility requirements don't change much except that the age is now expanded to 17 years of age and younger. The child still needs to be a qualifying child with a valid Social Security number. You also must claim him or her as a dependent on your tax return. If your child is under 6 years of age, the credit is $3,600. If your child is between 6 and 17 years of age, the credit is $3,000. How do you determine their age? Well, for tax purposes, it's their age on the last day of the year. But not everyone will qualify because of income limits. Let's talk about that for a minute. AGI, you've probably heard of it, adjusted gross income. This is generally your total income from all taxable sources. This can be found on line 11 of your Form 1040. If you're a single person earning under $75,000, you'll get the full child tax credit. If your filing status is head of household earning under $112,500, you'll also get the full credit. Finally, married couples earning under $150,000 will also get the full child tax credit. As a side note, above these thresholds, the credit is reduced $50 for each $1,000 over the stated threshold, but not below $2,000, which is the original child tax credit amount. So, if your income disqualifies you from claiming the expanded $3,600 or $3,000 child tax credit, don't worry, you can still claim the original $2,000 child tax credit. The AGI threshold for this credit is $400,000 for married couples and $200,000 for everyone else. Sorry for all the numbers, but it's important for me to get all the information out there. Okay, before I explain why you might consider taking the opt-out option, let's talk about advance payments and who gets them. The American Rescue Plan Act requires the IRS to pay half of the tax credit in advance. They plan to start sending payments July 15, 2021 through December 2021. If you qualify for the $3,600 credit, you'll get $300 per month for 6 months. If you qualify for the $3,000 credit, you'll get $250. The IRS will determine eligibility based on your 2020 tax return. If you haven't filed it, they will base it off your 2019 tax return. This is another good reason to file your tax returns. If it's later determined when filing your taxes that you in fact were not eligible for the expanded child tax credit, you may have to pay it all back. That's right, you may actually have to pay it all back when you file your next tax return. Let's talk about some potential pitfall scenarios that can create a situation where you might have to pay it back. Things like unexpected income, divorced parents who alternate claiming children, filing status changes, and the list goes on. These can all result in you having to pay back the advance payments. The good news is, if you end up receiving too much in advance payments and your 2021 adjusted gross income is less than $40,000 on a single return, less than $50,000 on a head of household return, less than $60,000 on a joint return, then you won't have to repay any of the credit overpayment. This is an IRS safe harbor created by the new act, but if your income exceeds the AGI thresholds previously mentioned, you will need to repay the entire overpayment when you file your 2021 tax return. My thinking is, as long as you don't need the money, it might be best to opt out of the advance payments and just wait to claim the credit on your taxes. That is, when you file your 2021 tax return. This keeps things neat and organized, financially speaking, and would avoid negative surprises at tax time. But if you know that you'll qualify for the IRS safe harbor provision, then go ahead and take the advance payments since you won't have to pay it back. So how do you opt out? The IRS is developing an online portal where you'll be able to opt out along with updating certain information like a new child perhaps, changes to qualifying children, filing status changes, etc. I will link that below in the description as soon as it's available. Finally, do take note that the advance payments are not taxable. It's simply a credit paid to you in advance. I hope you enjoyed the video. If you did, please consider hitting the like button and subscribing to my channel. If you have a question, feel free to leave a comment below. My name's Noel. I help people who don't have their own personal accountant by answering not so common money, business, and tax questions. Thanks for watching, and I'll see you in the next video.